Financial argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now, we've been looking at the job numbers since Friday as they came out, and we're realizing that these job numbers, they are absolutely horrific. And when we look at the information, nearly 4.5 million service jobs, they were created, and virtually no new manufacturing jobs were created during this time period. And when we look at the economy and we look at the jobs, we see that 86% of total U.S. employment, well, that's in the service industry, and only 14% of U.S. jobs are in manufacturing. More than two-thirds, or 68%, of S&P earnings come from manufacturing industries. Well, that's kind of odd. And if you really look at this, manufacturing is important, even though the central bankers, the U.S. government, is telling us that, no, it's not important. We are a service country. Well, a service country cannot continue on. You need to produce something. And they hoped and they prayed that the economy would continue to expand on the back of the service sector alone. Well, they manipulated a lot of the data to make it look like the country was pushing forward on service alone. And corporate profits, that suggests that manufacturing continues to play a much more important dynamic than it is given credit for. The decline in imports, surging inventories, and weak durable goods all are showing that the economy is weaker than what the corporate media, what the U.S. government, what the central bankers are telling us. The economy right now, it is not doing well. No matter what the stock market is doing, no matter what the president is saying, we are looking at the economic indicators, and they are showing the economy is deteriorating very, very quickly. Actually, when you look at the Fed Labor Market Condition Index, which they created, and we take it and we expand it over many, many years, we see the LMCI, which is the Labor Market Conditions Index, drop to negative 4.8. And it shows that the U.S. labor market, it's deteriorating at the fastest pace in 7 years. Now, their labor market condition index is not saying that everything is awesome. Because when you look at it and you compare what's happening now to 2008, actually prior to 2008, back in 2007, we are now headed down the same exact path. Because back in that time frame, we saw that the labor market condition index dropped from high numbers like, positive 7, positive 6 in 2007 to negative 2, then negative 3, then negative 4, then negative 6, and it went all the way down to like negative 38. Here we are in 2016. And at the end of 2015, we're on the same exact track, where their model is showing that we're at negative 1, then dropping to a negative 2, then negative 3, and here we are at negative 4.8. And it's dropping very, very quickly. And this is showing us that the U.S. labor market is not getting better at all. It's deteriorating. There are more layoffs. According to Challenger Gray and Christmas, going back to June of 2014, we are over 1 million layoffs right now. Companies are not hiring. Those people that are laid off, they can't find work. They're just falling off the job market. Believe me, every person would like to have income coming in. They would like to support their families. They would like to go on vacations. They would like to get a new car. They would like to put food on the table. And when they say people just don't care, they don't want to look, Well, that's very hard to believe, because when I talk to people and when I look around and the emails that I receive, everyone would like a job, but it's very difficult to find one. And people are just getting by there. It's very difficult. And we can see right now that this economy that we're in, it's not improving. I mean, we can listen to the lies all day long from corporate media, from the president. But when we boil down to what's really going on here, and we look at the indicators and we look at what's going on here, we realize that a lot of the indicators are the same as 2008 at this point, and there are many that are much, much worse. And it's impossible for the economy to be doing well. The only way that the economy can be doing well is if they've created these bubbles. They've created an illusion to make you think that everything is fine. Listen, prior to 2008, before the entire thing came crashing down, I would say the majority of the people thought everything was fine. They believed that everything was contained, that the economy was doing well. And all those people that are out there saying, no, there's problems. We have a credit problem. We have a subprime problem. And of course, the corporate media, the government, the Fed was all out there saying, no, that's contained. There's no problems whatsoever. But we know in the background what was happening. We know that everything was falling apart. And this is exactly what's happening right now. There's no difference. Well, there is one difference. It's about 100 times worse at this point. We see the Baltic Dry Index. That has fallen by 3 points. It's down to 607. The Bank of Japan, board member Takehiro Sato, well, he's raising concerns about the global financial stability, and he's raising concerns about the Japanese economic problems that they have. He warned that due to the impact of negative interest rates, he detected a vulnerability similar to that seen before the so-called value-at-risk shock in 2003. And what he's looking at, he's saying that this could affect the financial system's resilience against shocks in times of stress. Well, this is where we're headed. We're headed to an area where there's going to be a huge shock to the system. And this shock to the system is going to bring down the banking sector. It's going to bring down the credit sector. It's going to bring down the derivatives. It's going to bring down the stock market. It's going to bring down everything. It will be a chain reaction. It will not be able to be stopped. Because once it starts going, all bets are off. And we're getting closer and closer to that point. Tomorrow I'm going to be putting up an interview with Bix Weir, and he discusses how this collapse is going to occur, when it's going to occur, and what type of collapse we're going to have. And I just finished the interview with him, and if you go to the X22 Report Spotlight tomorrow morning, I will have the interview up there. This is a must listen to. It's very important. And this collapse scenario is much, much closer than we all think it is. And we all need to be prepared for what is about to happen here. And I know that people are out there saying, no, I can't believe this. It's not going to happen. Well, everyone thought that in 2008, when all the people were out there telling you that we have a credit problem, we have a subprime problem, real estate is going to take a nosedive, the market's going to crash. Just go back on YouTube and listen to those people prior to 2008, and listen to everyone saying, no, absolutely not, you're crazy, there's something wrong with you. Well, take what happened back then, bring it up today, and what we're going to see is we're going to see a crash of all crashes. It's not going to be like 2008. From everything that we looked at, from all the economic indicators, things have gotten dramatically worse off than where we were. The debt is doubled. Retail is declining more rapidly than we've ever seen. GDP We're in the negative territory. The stock market is a complete hoax. Housing is in another bubble. All the American people are sitting on the sidelines. The auto industry is one gigantic bubble. The student loan market is a gigantic bubble. The derivatives market and the banks, well, that whole thing's getting ready to implode. And it is going to be a major disaster. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.